All right, good evening, everyone. Welcome to the Hurley Investments Market View Commentary, the last one for March. This is March 28th, Monday, 2022. Today, I'm going to wear my political hat just a bit. So, I hope you will bear with me. I will be speaking from a little bit of frustration. But today, based on what's happening in our markets, I am going to wear my political hat just a bit. Three main points I want to go through today. Biden's budget and what it means. Russia more likely to settle dispute, what it means for our portfolios. What about oil and looking at new oil companies? Or I should just say opportunities. So let's run it from here really quick. Let's put it this way to start out. Biden's budget. What can you tell me about Biden's budget? What is Biden's budget right now? And there we go. So we have a billionaire tax rate of 20%. Anything else? I agree, and I agree with the two comments that were just made. Taking the lesser of the two comments, yes, I do think it sucks. What else can you tell me? What else about the budget? Why don't you tell me? So that comes from William over across the pond. I'm just going to say it's an increase in defensive spending, which I'm not sure that's really technically a bad thing. We should have one more thing that I don't see anyone typing in, though. What else was moved up? And there we go. So 21% to a 28% corporate tax rate increase. So let's hit that one first, right? Who gets hit with the increase to 28% corporate tax rate? So who does that equal? Wow. I had three people come in so quickly, it was unbelievable. I have corporations. I have customers. I have shareholders. I have us. And if I can just put it to where it really affects us equals any LLC, sub S Corp, C Corp, and possibly any profitable trusts. That's where it hits us. If you're running an LLC, a sub S Corp, a C Corporation, that's where it goes to. That's where it's really going to hit the numbers. Let's talk about the billionaires, right? Tax increase. Actually, tax increase to 20% of, what's the key word there? 20% of unrealized gains. That's the key word, right? Unrealized gains, which for all intents and purposes, what a bugger. Because it's important. At least I feel it's important, right? What I don't understand in this, no tax increase for anyone making less than 400K. But we've also heard a $10 million to $1 million capital gains tax would fall under this. Now they're calling it an umbrella. I make less than 400K, but my taxes are still going to go up by a third because I file a sub S corp. So I'll go from a 21 to 28% tax rate. Since the verbiage isn't defined, if I sold my house right now, I could probably walk away with about $950,000 after paying off what I owe and all that kind of stuff. I'm really close to getting a mandatory 20% tax rate on the sale of my house because it's undefined. A history lesson. I find this very interesting. Income tax was supposed to be for millionaires only. What a bugger, right? The funny part of this, Biden ran on no tax increase for the middle class and no, I'm going to call this, no extra pork for areas like defensive spending. It's funny because I make the comment to Keeve all the time. You don't have to be right. Let's face it, you don't have to be right. In our job, it's not a matter of who's right or wrong. We're not going to be right all the time. We're just not. But what we do is we make sure that we can justify what we were thinking. Whether we're right or wrong, we just want to justify what we were thinking so that we can explain it. Now, a little bit about what we're looking at or what we can hope for, right? Will it pass? Probably in the House with some revisions, right? And probably not in the Senate. So would I expect some end of the year issues and bantering? Probably. I hope it doesn't go through. I'll be honest with you, I'm pretty disappointed in Mitt Romney. He's not up for election for another 4 years. I don't know if he would pass this. He's worth $250 million. He understands what it would do. I mean, let's face it. If a billionaire had to pay unrealized gain taxes, do you know what would happen to our stock market every time a Walmart, a Tesla, a Google, an Amazon, an Apple started losing some value? Billionaires would sell off to pay their taxes. In fact, they might just sell off everything that they have that's over, a year and a day? Could you imagine how quickly stocks would fall? Could you imagine how quickly our long puts could make a killing? We might just be long put experts. If this passes, you might see Hurley Investments go to long put experts. And we'll just we'll just run long puts as stocks fall, book the profit. Boy, to me, it seems like it would be pretty darn easy to book a portfolio, to double a portfolio every year that way. Just book it over and over and over again. A couple questions came in. Will they risk the midterm elections? I don't know. They've done it before, and it's not like it's exclusive just to Democrats or Biden's group. We've always had politicians blow it for themselves. God, I mean, we watched Mitt Romney do a fabulous job on his first debate. And then he felt he was too harsh and too rough, and he gave his election away. Out in California, I've seen some really stupid decisions made by both sides of the aisle, Democrat, Republican. With all due respect, whatever happens in California, man, I'm glad I moved out. I'm not sure how they don't get it. But if I can make a couple comments. Do you know how much it costs for a Tesla that can go 300 miles right now in real life? Give me an idea. How much do you think it costs for a Tesla that can go 300 miles on a charge right now? I have some brothers that own them, so I know this answer. There you go. Somewhere between $60,000 to $72,000. $60,000 to $72,000 gets you in the mid-level that's supposed to go 300 miles. Supposed to have charging of 45 minutes. Neither one is true. And out in California, my brother gets stuck for hours on end, not making it home. And I think it's kind of funny because what we're being told government-wise is because you can't afford higher gas prices that are at, $5 a gallon, go spend $60,000 to $72,000 for an electric car. Because you sure as hell can afford that, right? I'm not saying that, what am I trying to say here? I'm not saying that we shouldn't find ways to protect our environment. But whatever idiot came up with the windmills, the amount of oil, the amount of recourse to get back what we put into it, was like 142 years to make back what it cost. The numbers of energy put back into the grid are less than a third of what they said they were going to be. They only missed it by 70%. The amount of fossil fuels and time and upgrades and maintenance for them, man, those windmills with the big old 100-foot wings on them, it just, what idiot thought up of that one? I don't get it. I just don't get it. So, we didn't help out our markets this morning. This afternoon, what happened? Russia more likely to settle the dispute, right? I found this interesting, that it brought our markets back today. Unverified and no plan of action. Brought our markets down from being, from being to nothing, being down 0.5% or 0.6 to, let's see here, to being up 0.7. In fact, I just noticed that. Kind of interesting. But yeah, brought us back up to being down, 0.63 to being up 0.71. So as I was taking a peek at it, my comment was, if we get a Russia-Ukraine settlement, then our market pops, I don't know, I'm going to say roughly 5 to 7%. Anyone disagree with that? 10% would be nice. I see that, William. I don't know how you justify 10%. Inflation and GDP that's supposed to be slowing down, yet we're looking at a 7.1% GDP number coming up on Wednesday. I don't know. It'll be interesting to see. There's a disconnect between our slowdown, our supply chain, and our GDP right now, right? There's a huge disconnect between the GDP numbers, supply and demand, with the supply shortage and inflation. I wonder how inflation is going to affect GDP. We might spend less money. Well, we might spend the same amount of money, but get less for it. That's just a thought. But it'll be interesting. It'll be interesting to see where we end up. It'll be interesting to see where, how would I say it? I'm going to pay attention to our numbers this week because they worry me. But something to keep in mind. We need to put the long put insurance profits back into shares. And the comment was brought to me earlier, but Kevin, what if we're wrong? Agreed. We've nibbled. We've nibbled at the bottom on a couple. But we're now to the point where in the next couple days, or at the end of the week when we go through the end of the month on Thursday, a down day, it's time to nibble and pick up some more shares with those profits and put more of the money back to work. Sometimes people say, well, how much money do you put in cash? And again, we've been somewhere between 3 to 10%, maybe 5 to 7%. It's always a moving target. We wanted to be fully invested for quite a while. We wanted to be fully invested because being fully invested gave us the opportunity to participate in the bigger markets run. And it's funny because as an advisor, we hear, oh, I've still got a lot of cash, which you might have, especially it's been difficult to put money to work over the last year. But we're looking to put people and make them more fully vested with enough money to put protection on as needed. That's our goal. And someone actually brought an interesting comment to me. They said, what do you think of FANG? And in my thought, it's an oil company. If I was going to think of FANG, I was going to say, well, what do I think about FANG versus Chevron, right? That's how I would look at it, which means I'm going to go right back to our simple fundamental checklist, which one more time I have attached as an attachment, but I would just go through this chart on FANG and I would compare it to Chevron. If I was going to bring these up, and I'm going to do this a little bit differently, FANG is an energy, oil and gas E&P, right? I would be comparing it to Chevron. Chevron's what I see as the best of the best. If I was going to look at institutional ownership, Chevron institutional ownership sits at 67.7. I actually like to see that closer to above 70%, whereas FANG has a 91.60. It's mostly owned by institutional money. 96.1%, right? I think that's what I just said. So in that regard, I like where it's at. Why don't I check, huh? Instead of just assuming, let's not make an assumption. 91.6. Get those reversed. Average daily volume, I need it over 1 million so I don't get in trouble, right? I need it over 1 million so that I can get in and out of positions. Average volume on FANG is down here, right here in the corner, 2.93 million. Taking a quick look on that one, hey, you know what? I'm kind of liking this right now. I'm kind of liking it. It seems to be a good opportunity for an investment. Dividend, and here's where I start to maybe get an understanding of it. Our dividend is in two places. It's 1.42% or $2. And that's $2 on, or 1.42% on a $140.70 stock. That's not really good, especially when I compare it to Chevron. Chevron pays a 3.41% dividend, or $5.68 on a $166.35 stock. So I wouldn't be happy with the 1.42% dividend or $2, right? It is a dividend. They do pay it. That doesn't excite me. That's not something that I'm like, you know what? I can't wait to get into this one. The highs or lows. How much growth opportunity do we have? It's at a high. I mean, it's at a yearly high. Just looking at the chart, yearly high, there's very little upside opportunity. I mean, we can take a little check here and we can say, hey, it closed at about 146.40. So you have $6 to the upside and 65.61 to the low side. So if I was taking a quick look at this one, what did I say, 75 to the low? 65.60. And 65.60 to the low side. Which means it's probably much more likely to go lower than it is to go higher. Debt to equity. I don't know a lot about the debt to equity, but it's 55 cents on the dollar, long-term debt 55 cents on the dollar, compared to Chevron. That would be the one I'd be comparing it against. Chevron is 23 and 22 cents to the dollar. So if I was going to choose FANG over Chevron, I'm not really excited about it again because it doesn't, it's got twice the debt per dollar that Chevron has. Makes me worry. Now also debt to equity and long-term debt to 0.22. I don't know. I just, as I look at it, I think, well, Chevron does so much better. Cash per share, $3.77. Chevron, $2.97. That's close. Book value to shares at 72.62 if they are to sell everything. 67 to 90. You know, debt-wise, they seem okay. They just don't seem as good as Chevron, right? Revenue growth rate. So this is where I'm going to look a couple different ways. Number one, I'm going to look at earnings per share next year. It's expected to be at 12.12, right? 12.12%. PE is at 11.56, 7.65 forward PE. I don't know if those are really good, but I don't like the next year's earnings to be down. So the next year, the expectation is that they're going to be down by 12%. Well, how does that compare to Chevron? Wow. Chevron has a forward PE of 14.87, a PE ratio of 20.65, and even Chevron looks like they're going to be down 12% next year. Well, is Chevron overpriced? Is it too high? Maybe a little bit, but it seems to be on a bigger or a better growth run moving forward than we have compared to FANG. So if you ask me, I don't like FANG compared to Chevron, even though they're looking similar. It just doesn't have the same growth rate. Chevron should be able to grow faster than I would see FANG grow, right? Earnings price, I haven't looked. Profit margin, PE ratio, I kind of just went through some of that. PEG ratio, sector growth, ranking industry, beta. More information I go to, but really if I was going to look at this, there is something that does say, you know what, this can move quite a bit higher. And there's a short float rate of 3.12%. Great gross margins right now. I'm not sure how those are going to end up if the price goes down. Great equity ratios right now. Not sure how that's going to be if the price goes down. It'll be pretty interesting, but I would say if I was looking at FANG and comparing it to what I knew as a company like Chevron, I'd probably be going with Chevron. Chevron's a more proven entity. It has the cash reserves. It has bigger sales. You know, 24 billion is nothing to nothing to sneeze at. Kind of a big market cap, but 380. I would just be going with Chevron. The short and the skinny, Chevron is where I'd be placing my money if I was looking at an industry that's expected to be going down 12% in earnings through the next year. In fact, if I was really looking at this sector, and I know I kind of said it before, I wouldn't be investing in energy at this time. And I missed it. You know what? I missed it last year. Fact of the matter is, when you're becoming energy efficient or independent, I'm just not as interested. What I would be investing though in, if I was really looking at something, and if I found this one kind of interesting, any flour or grain manufacturer will receive higher prices going into next year due to the conflict. And it's funny because I saw some stuff online. Oh, Europe's going to go into a famine. There's not enough grain, there's not enough wheat. US, we're not going to be able to find bread or grain. Russia and Ukraine, they just produce so much of this vast amount. Well, that's not true. If you go through, the United States actually produces more than Russia or Ukraine by itself. Together, they out-top us, but we use like 758 million metric tons of wheat, grains, flour, and we export additional 100 out to the world. Yes, our prices are going to go up, but to see some of the comments and some of the memes that are going out there in regards to flour, grain, sugars, they're just not true. They're just not true, so don't get caught up in social media that's going to make you worry uselessly, right? All right, big picture, I'm really just going to getting personal. Strikingly, several Fed officials issued some personal opinions, and they is following the FOMC meeting and how I think the Fed might have to think about moving policy accommodations. If you really want to talk about that and that number, I think this is pretty interesting. Bullard, obviously the biggest hawk, thinks our Fed funds rate should be above 3% this year, which means we would have what? A 2.25% rate interest hike. The biggest dove sees an interest rate hike going up 1.25%, which would be about a 0.25% hike through the rest of the remaining, 5 of the 6 remaining Fed meetings. Chicago Fed president expects the fund rate to be 2.25% to 3% by the end of 2023 and 2024, where some people think it's going to be at 2.5% by the end of this year, which would be interesting if they just raised all the rates really quick this year and then let us deal with it going into next year. The short answer here is inflation is going to stay with us for a while. If you already haven't noticed, the loans on homes are becoming more expensive. The loans on construction homes are becoming significantly more expensive. So you're going to see, we're going to see inflation. We're going to pay more for things than we have before. And to make the comment that, well, someone made the comment, and I'm just going to make a comment back that the midterms will probably not fix this. Even if we gain control of the House and Senate, this is more of a Fed issue. It's more of a war issue. It's more of a supply and demand issue. It's a supply chain issue. It's not like there's one party that if we took power, if the Republicans took power of the House and the Senate, like they're going to be able to fix it. It's something that we're going to have to play through and get some of the supply chain issues fixed before we're going to see some pricing come back down. I think by raising the interest rates and doing so, boy, the most aggressively I can remember, only because I was too young to remember the aggressive rate hikes in the 80s. Wow is all I got to say. We're going to go through inflation for this year for sure, probably through 2023 and 24. And it'll be interesting to see what we call normal inflation at that point. I obviously think the price of gasoline is ridiculously high. Ridiculously high. And I think we get lulled into expecting, well, you know, it's $4.50, but it's not $5 like it was before. So somehow we think that we're saving money or that it's not that bad. Man, turn on the spigots, open up the pipeline. I think it was really foolish the way that our country is handling our energy reserves. It's just ridiculous. Someone out in Louisiana said they filled up today for 338. I filled up for 419. 419 out here in Utah. We have oil. We just don't have refineries, so we ship our oil out so we can pay a crap ton more instead of building a freaking refinery in this state. Shows you how great my politicians are out here, huh? Boy, on the east of the state, we're just going to get all this oil and we're going to ship it down to Texas instead of building a refinery or two here so we can lower our own cost of oil. Oh, the stupidity of politicians is all I'm going to say. Okay, where are we at? We still are technically bullish, and we have our bounce off of the 50-day, but we're running right into the 200-day. So it's going to be a little difficult. We might actually build a base right here, which I hope we do. I wouldn't surprise if we come down and test the 50-day Wednesday or Thursday as we end our month, and then see a bounce higher on Friday. The S&P, great recovery today. We're also now above the 200-day. Expectations will come down and test that 200-day. I'd love to see us put a bit of a base in right here for a week or two, but we're technically bullish. Need to make sure we get some more profit put into from those long puts that we took off a couple weeks ago. And obviously the NASDAQ, which actually led the way today, pretty nice to see, coming up to the 200-day. So watch us go down and test the 50-day before we try to challenge that 200-day. It's been severely beat up this year and has quite a bit of a recovery to get back to. Obviously, it looks like we started the year up there closer to 15,750, sitting now at 14,354. Where are we going to end April? April historically has been a bit of an up month. If you were to ask me just right now, bigger than average swings, I would say there's a good chance we're probably going to be up 2% in April. Earnings this week, really nothing much of interest. Micron reports on Tuesday, Sportsman's Warehouse, PVH. 5 and Paychecks on Wednesday. Thursday is BlackBerry. Nothing really exciting, but what is exciting are economic reports. FHFA housing price index on Tuesday or tomorrow with the Case-Shiller and consumer confidence. Consumer confidence is supposed to be at 107.5, which I don't understand how the consumer confidence, what 3,000 people they go off to that as a consumer likes the pricing we're paying right now. ADP employment on Wednesday, but more importantly, GDP is supposed to be at 7.1. Shocking. There's talk of a recession, yet our current numbers are going to come in at 7.1 for this quarter, January, February, March. Scratch my head on that. Personal spending, personal income on Thursday, and then our average work week numbers on Friday. Friday, even though it's a Friday, well, how do I say this? This is the first Monday, and it seems like forever that we've had an up Monday, right? Mondays have usually been the downer days for the week, and I'm probably only thinking 4 weeks here. It'll be interesting to see if we have an up Monday and an up Friday as new money goes to work at the beginning of a month, or if we wait for that to happen over the weekend. All right, currently trading, currently letting a lot of positions run without protection. We do have a little bit of protection in place. I found some interesting articles, but really why Bill Gates warns against investing in Bitcoin. If you only should do it if you have less money than Elon Musk, you should watch out. So pretty interesting to see someone not being so happy about Bitcoin. I put a bunch of articles in here, different points of view to understand what the budget could look like. And so please read through this. I found it pretty interesting. There are 3 different takes on it. I'm usually not a fan of Martin Armstrong, and he came out with doom and gloom over the weekend. So again, take it with a grain of salt. Yeah, I'm just giving you information that one is a little bit eccentric for today. All right, questions. What questions can I answer for you guys? And what would you like me to go through? I made the comment, have any name for flour / grain manufacturer? The ETF wheat is at 10.26 monthly percent. Yeah, you know, I just go through our government numbers. I'm actually going through, for the life of me, I can't remember, but I basically go through our government numbers, and there is a statistical source out there that is off of those government numbers that I use just to find out things for myself. And yes, I do think Will Smith slapped Kevin Hart, and boy, is he getting let off early. He's getting let off easy is what I meant to say there. Okay, well, hey, if there are no questions, I appreciate you guys being with me here. Hopefully this gives you an idea of how we've looked at certain things, how we've done our research to make sure we understood what was going on. We've got a lot of research we're going to do as we keep going through the perspective budget as it comes out. I just found it interesting that a billionaire's tax that wouldn't have any effect on anyone unless you're worth $100 million, somehow it is affecting our simple LLCs, our S Corps, and that the language I've heard, I haven't seen it, but for a $1 million to a $10 million capital gains gain would also fall underneath this mandatory minimum 20% tax rate. Which I just think of homes and just think, man, how can they do that? All right, guys, I see no questions coming in. Have a great evening. I hope this information was helpful for you. If you do have any other questions, don't hesitate to send us an email, khurley@hurleyinvestments.com, or if you want to go to Keve, Keve, @hurleyinvestments.com. Have a good night, everyone. Look forward to seeing you on Thursday morning. Bye-bye.